Investors and friends, a very warm welcome and thank you for joining us today. It is a pleasure to have you with us. We have clients dialing in from Hong Kong, from Zurich, from the center of Switzerland, from Geneva and London. And we are very grateful that you have chosen to spend the next 30 minutes with us. Slide. Next slide. My name is Stefan Kreuchi. I'm CEO and partner of HSZ Hong Kong Limited. And joining me today is my partner and co-portfolio manager, Wenjie Ge. Slide. One moment. We are speaking to you at an interesting moment for China. In the past 2 weeks, we have watched two remarkable events happening back to back. First, President Trump visited Beijing, and he was not alone. He brought 17 of America's chief executives with him: Musk, Tim Cook, Jason Huang, Fink, Schwarzman, Solomon, basically the entire commanding height of US tech and finance. All of them sitting together at the table with President Xi. That is not a photo opportunity. That is a clear and deliberate signal. The second thing we observed, literally yesterday and the day before, President Putin was in Beijing as well. So this means China has hosted both the American president and the Russian president back to back within less than 2 weeks. I personally do not believe that this is coincidence. I believe it tells us something about how China sees its position in the world today and about the environment in which we are investing. So we want to come to you quickly and while the news is still fresh and share with you how we read this and what this means for investing in Chinese equities and for the allocation to Chinese equities in a global portfolio. Thanks. Yeah. What we will talk about the next half an hour or so is first we'll give you our read on the Trump-Xi meeting. What is different this time? Was it theater? And what matters for capital allocation? Secondly, Wenjie will take you through what market participants are focusing on and how this shapes our expectations for Chinese equities going forward. And thirdly, we'll show you how the HSZ China Fund is positioned in this environment. We leave the final 10 minutes for your questions, and we promise no question is off the table. So if you have any question during the seminar or at the end, during the Q&A session, then you can send these questions to us by using the Q&A box at the bottom of your screen. So here's our headline for today. I think for the first time in several years, we believe the risk reward in Chinese equities has shifted in the favor of investors. The external backdrop is calmer, the domestic backdrop is improving, and the names we own in our portfolio are delivering. So we are not asking you today to take a heroic view on China. We are simply saying that the probability-weighted picture has changed, and we want to walk you through why. With that, let me pass over to Wenjie to take us through the presentation.
Thank you for joining us today. So I will use the next 5 slides to talk about our broader takeaway from the Trump and Xi meeting. So if you want to walk away with just one sentence from today's meeting, I want you to walk away with the impression that this Trump and Xi meeting signals there's a change of focus. What do we mean by that is we think there's a strong change from so-called ideology to more materialistically important business development or business materialistically more important matters. So for example, maybe you recall last time when Xi and Trump meet in 2017. At the time, many people talk about so-called de-risk, diversification of supply chain, China plus one, these kind of strategy. And it's been a while, we haven't heard such phrase have been mentioned in any of the meetings in the last few rounds. Also, if you look at the attendees from the Trump and Xi meeting from the US side, there are 17 CEOs from the US. And what's interesting to note is only one of them is coming from agricultural industry. The rest 16 of them are either coming from finance or tech background. This is a very clear comparison versus maybe 9 years ago, when most of the business leaders attended with Trump, walk away with a 250 billion order from China. It was from energy or agriculture sectors. So there's a very clear shift that it's moving more towards high-end collaborations in technologies or finance between the two countries. So next slide, we want to give you a brief download of what we think are the three key takeaways from the meetings. First is, I think both US and China confirmed the importance of ongoing dialogue. So the next meeting between Trump and Xi is scheduled in September, with another 2 potential meetings for the rest of the year, including the APEC summit in November and the G20 meeting in December. So it's quite rare that both leaders are meeting 4 times in a year, and also the November midterm elections is running between all the rest 3 meetings. It's also very unusual for China to announce the meeting schedules 4 or 5 months ahead of the times when Xi agreed to visit the US in September. So I think with China and setting up the committees with the help with the US regulators on investment into the US, there's some more signals that 2 sides want more business collaborations. As I mentioned earlier, the 16 out of the 17 CEOs attended the meetings were from the tech and finance sectors, and there are also some deals have been gradually become materialized in the last few days, including, for example, Citi, who has been granted to operate their wholly owned subsidiaries in China. They actually started negotiating with Chinese government 4 years ago, and this time it was materialized. And not to mention there are another 200 Boeing's orders that could be materialized, and some agricultural purchase from China, or some China side also announced some tariff reductions on some of the import goods. Details will be confirmed, I think, in the coming weeks or months. And I think there's another very important change or takeaways from the meeting is there's a strong change in terms of tone around Taiwan. So I personally found this very interesting that President Trump mentioned that Taiwan as a very good negotiation chip. So we see, in the last few years, Russia and Ukraine is in the war and is in chaos. And now US and Iran are in the war and in chaos. And I think it reinforced our view that we don't think the military conflict between China and Taiwan is imminent. It's also very important to note that both sides, China and Taiwan, has a large volume of business activities going on. People are flying between each other's and creating a lot of business inside China's. So this view of not imminent war between China and the US, I think is also understood by the US side. For example, a couple of years ago, you might have heard China might invade Taiwan in 2027, and we're less than 12 months from 2027. And I think that timeline, some media has broadcast it could be delayed. So overall, we think it is a very positive tone from the meetings. And we also want to give you some highlights of what we are hearing as equity market participants in China. And I think apart from physical AI, which includes like robotics, which actually is a strength of Chinese companies leveraging 3 areas I think China has advantage to. First is the supply chain. Second, China itself is a very large market. And third, Chinese people actually traditionally are really good at developing applications. If you think about, the e-commerce business, the e-commerce business was actually first developed in the US in 1982 by Boston companies. But after, decades after that, China started building, for example, community buying by Pinduoduo or Taobao. These kind of e-commerce platform in China really leveraged their application know-how and created new business. Another good example could be like EV. The first EV was developed in the US 200 years ago, and now China is the largest EV producers. So apart from that, this physical AI, we also see a strong trend of reflation trade that's happening in China. In the last few days, we have heard, for example, Maotai, the hard liquor companies in China, announced their second round of price hike. The high-speed railway price in China between Shanghai and Beijing just announced a 20% price hike. And not to mention the oil-linked goods are generally seeing some price hike as well. Overall, we think this is a very important because it reinforces our view that the reflationary trade is happening in China. And this will benefit, for example, ourselves, the long-only approach, greatly. Historically, there's actually some correlation between inflation and market return, which is shown on the right-hand side chart. Next, I want to talk a little bit, reinforce what we do here at HSZ. So we primarily invest 20 to 25 entrepreneurial Chinese companies. And in the last few years, we've been telling investors that there are three positive momentum we see in China. First, there's a strong focus on the entrepreneurial China theme, both from the government and also from the private sectors that's started to invest more than they used to. We also see the fundamentals are improving, including corporate actions, capital allocations by the Chinese companies are improving. And lastly, we also see some strong momentum that's building on into the equity market. So below, we have listed you the top 5 companies that's in the portfolio, including Leader Drive, which supplies the gearbox for robotics or high-end manufacturing. Montage Technology, this is a memory chip interface companies. And Cambricon, which is like NVIDIA of China, the AI chip. Xinyu Lighting, which is the automotive lightings for cars. And Naura, which is a semiconductor production equipment manufacturing in China. 4 out of these top 5 companies, we see actually positive takeaways from the Trump and Xi meetings. So 3 things to take away, just to wrap up what we discussed earlier. We think the Trump and Xi meetings is really a change of focus, focusing more on the materialistically important matters instead of ideologies. And we also, overall, we think this is positive for China, reinforce our entrepreneurial China thesis. And we think the reflationary trade is also happening in China, which is still largely ignored by most of the global investors. With that, I'll pass back to Stefan.
Okay, next slide. So yes, so here we just to sum up, we show you the performance of the China Fund over the more recent, also a bit longer history. And also, as you probably have seen at the very beginning, we have been awarded the Best China Fund in Switzerland by Lipper for the last 10 years. So with this, let's go on to the question and answer session. Maybe next slide, please.
Sure.
And so, as I said at the beginning, please, if you have any questions, use the box at the bottom of your screen, the Q&A box, and so we'll receive your questions. So we have received, I think we have received the first question. Yes.
Yeah.
Please.
The first question, which is I read out. How do you see Chinese real estate market evolving? Is it still going to impact domestic economy? I'll first give my few cents on the real estate economy. I think you have to look at it in maybe 3 bullet points. First is the overall real estate market impact to the broader GDP is much, much smaller than it used to be. At the peak, it could be around maybe 15 to 20%. Now it's low single digit. So the overall impact is much, much less. Second, we have seen some positive momentum building up actually in the real estate industry. For example, as some of you might know, Hong Kong market, where we're in, Hong Kong market actually has seen the real estate market moving up quite substantially, almost double digit from a year ago. And recently, we also see some anecdotal evidence that the top tier cities in China is also seeing some positive momentum building up in terms of transaction and also price. Hong Kong specifically, I think it's driven by a lot of IPO that's happening in Hong Kong. So, a lot of mainland entrepreneurs get their companies listed in China, and some people actually migrated from from China to Hong Kong. So a lot of this real demand is boosting up the local property market. On top of that, the rate is also very supportive in China, in Hong Kong. The mortgage rate is lower than some of the time deposits. So overall it's building up the momentum in Hong Kong. I think the same story starts to apply in China, but on top of that, the government measures to relax some purchasing requirements of top tier cities is also helping. So overall, we're seeing some momentum that's building up in China. So overall, we think the real estate market the impact is less than it used to be, and if anything, it could be happening on the positive side. Stefan, do you want to add anything?
Yeah, I think it's probably all been said. Moreover, I think I would to add that we have now seen, the real estate issues in China working through the system over more than the last 3 years. I think so the earnings impact has been seen, and also, of course, it has been a drag, but still, I think it's pretty much baked into the overall picture in China. So I think that's under control as far as we can say.
Sure. Second question we're having is, if the US allows NVIDIA to sell chips in China, isn't it detrimental to the Chinese semiconductor producers? Sure. I'll first give my few cents on that. Thank you for the questions. I think overall China is what they're trying to do in the last few years is building up the domestic semiconductor supply chains, and a lot of progress have been made. Recently, we've been hearing that H200 chips could be allowed to ship to China, but actually there are some market rumors. Some big tech companies is allowed to purchase like 70,000 H200 chips. But so far, as far as we can tell from including NVIDIA's recent earnings, even NVIDIA itself doesn't think this will change the directions of China try to push forward the domestically made chip. Now, having said that, if the US starts to allow NVIDIA to export Blackwell, which is more advanced chips, the narrative could change. Because I think in a lot of the Chinese media side, they actually think that NVIDIA chips could be so-called poison pill. So you get short-term, maybe you get a boost in your AI capacities or computing powers, but long-term, you'll be wrapped up to the CUDA system, for example, the NVIDIA has been building this whole ecosystem that NVIDIA is very strong with. So with that, I think overall, we will still see the development of Chinese domestically made chips. And if there's any wild card, I think it's more related to the more advanced chips that the US could supply to China, including like NVIDIA Blackwell, for example, or Luding, for example. Third question we get is, could you elaborate on the rare earth monopoly in China and how it could evolve also in a macro conflictual environment with US? So on the rare earth, I think both sides in November last year agreed that the restriction will be removed for the next 12 months. And so far, I think there's no additional agreements that have been made. But the US has claims that China will continue to lift their export controls on the rare earth. The rare earth, China is very strong with more than 70% global supply market shares. And I think this positions of Chinese company is unlikely to change anytime soon. Not just the environmental related costs to extract the rare earths, but also the know-how, including the patents. A lot of them is actually owned by the Chinese company. If you recall, several years ago, when Japan and China had the conflict around the Senkaku, the island, China also introduced the export control on the rare earths to the Japan. And a lot of Japanese manufacturing, especially the high-end manufacturing, which use motors that needs the rare earth inputs from China, basically hold their productions. For a while, 3 years after the U.S. and Japan and China conflict, Japan actually did lower down their dependence on China by maybe 10 percentage point, but they couldn't basically find the substitutes of Chinese suppliers. So in the last 5-10 years, it basically went back to the original level, which is why Japan is also suffering greatly from the current export control from China to the Japan. I think the situation will be quite similar, even if U.S. try to diversify its supply chain from China. It's really unlikely they will find a quick solutions to the cheap and high quality rare earth materials that can be supplied from China.
Yeah, and as we have said, I mean, the whole relationship between Trump and President Xi is more transactional in nature than ideological. So there's a give and take, I think, from both sides, and I think rare earth is obviously one of the elements in that relationship that is now more focused on the economics. Another question? No. So while maybe you think of other questions, one thing maybe I think interesting to see is what's the difference in the relationship between President Xi and President Trump versus the relationship between President Xi and Putin and President Putin. So I think it's quite interesting how this is these two relationships are different. I think these two relationships are very different in terms of nature and depth. I think that based on my understanding, President Xi and Putin have met more than 40 times since President Xi came into power. And maybe also it's a lot more personal and in nature, the relationship between these two presidents. Whereas the one between Trump and President Xi is obviously more transactional. It's a working relationship, as we have pointed out. It's a relationship between structural rivals. Whereas during the trip now of President Putin to Beijing, the two sides actually renewed their so-called friendship treaty. This is 30-year strategic partnership of coordination. So it's not a deal. It's really a partnership. Just as a side note, maybe you remember that 2013, the Sochi Olympics there, the President Xi was celebrating with Putin's 61st birthday. It's obviously a lot more personal relationship between these two presidents. But what's important also seeing what this shows is, I think successfully President Xi is positioning China really as a swing power, meaning not the power that's aligned with one bloc. So China's talking to everybody. They talk to the US, they can talk to Iran, they can talk to the Europeans. And as you probably know, over the last few months, the Canadian president, the French president, the German chancellor, the French president, they all visited China. And as you probably know, the relationship between the US and their allies is not as good as it used to be. So obviously China is positioning very much in the middle as a power that can absolutely talk to both sides and negotiate. And you see that also in the current Iran conflict, where obviously President Trump has asked China to help in that context. So, any other question you have there?
Yep. As a reminder, if you have any questions, please type in the Q&A. Meanwhile, maybe we'll talk a little bit about, I think a lot of people question about the trade tariff between the US and China, how this would evolve?
So, I mean, obviously, it's different what has happened now, I think, in terms of the, but pretty much, I think the headline tariff architecture is largely unchanged, but the operating posture has maybe changed a little bit. I mean, as we talked about the tech CEOs in the delegation, that I think we read that as a signal of a quieter accommodation on semiconductor and AI supply chains, probably even a bit more, even in place where the formal policy is unchanged, but there might be underneath that, there might be accommodation in terms of that exchange of technology. Also, we see the re-engagement, as was asked in the question, between on AI hardware semiconductors, and also in terms of the consumer market access for US is obviously on the agenda. I think we have to watch out for licensing exemptions and maybe quiet the listings rather than sweeping tariff cuts, in that context. So I don't think you'll see a lot of headline change, but you might see a lot underneath the surface that will change. So we do not expect the grand bargain. We expect incremental sector by sector commercial normalization.
Sure. We have a few more questions. Will the US and China agree together on how to handle Taiwan and North Korea, give and take? Israel doubled in 2 years, let the terrible human tragedy arise. South Korea doubled in 1 year, yes, Samsung, SK Hynix, but could Trump push for a solution in these long-standing hurdles, i.e. the US soften the stance on the independence on Taiwan, and China helps disarm North Korea? The short answer to that, from my perspective, is I don't know. But I think the relationship between Trump and North Korea is also quite unique. He's probably the only president ever in the history that stepped into the North Korean territory as well. So I think to Trump, a lot of things is more about negotiation or deal makings, including like US selling 14 billion arms to Taiwan, which, by the way, they agreed another 12 billion in December last year, but none of them actually has got delivered, or most of them has not been delivered. So I think that you have to monitor the situations, and we don't really have an answer to that. But I think for him, and also from these meetings, the important takeaway is for him, it's not about ideologies like maybe in Biden era or in other US president era. It's more about negotiations. And the more cards or more areas you can bargain with him, you can get a better deals. And I think that's why maybe later on someone asked you about the Iran Strait of Hormuz. But for him, basically everything is negotiable. So the short answer to that is, unfortunately, we don't really know the answer to that. But we think with this kind of deal-making mindset, there could be something surprising coming out.
Yeah, as I think you need to raise the point I tried to make earlier, that really China is in the middle and can negotiate with all sides, and definitely I think China has the potential, if any power in the world right now, to play that role to help on both sides, definitely.
Sure. Another question is, does the blockage of Strait of Hormuz represent an issue related to oil supply for China? Please.
Well, I think if I remember correctly, I think the oil that China buys from Iran makes up about 11%, I think, of the overall oil imports for China. So obviously, that's a quantity, I guess, that can be replaced by other sources.
I think the oil supply is an important factor in China, but you have to bear in mind maybe three things. First is China also actually produces oil. The northern part of China, northeast of China, used to be the place that produced a lot of oil. It's draining up. Now it's moving more towards Tibet and west part of China. So China hasn't really exploring this oil field for two reasons. One is for the cost. The Middle East is still far cheaper. And second is to national reserve. So the China does not like Middle East. You can drill anywhere and there are oils coming out. So it's more for national reserve and etc. So with the Strait of Hormuz issue, yes, it is hurting China, but the issue is far less severe than many other Asian countries. In fact, just a couple of hours ago, Australia just requested China to send 60,000 or barrels of jet fuels to Australia because of the issues in the oil supply chain they're facing. I think other Southeast Asian countries face similar kind of issues, and I think Japan and Korea is trying to play a key role in that, but we won't be surprised that China is joining that conversations. So Strait of Hormuz, yes, it's important to China, but like Stefan mentioned, it's not detrimental compared with some other Asian countries in that regard. Another question we have is how could they react if situation worsens, blockade continues? So I think this is related to the oils questions. So so far China has a lot of national reserves. They have more than 200 days of. There's no clear number, but the estimate is between 200 to 250 days of reserves in China. So given that they're supplying to Australia, like I mentioned earlier, I think the chance of even if the situation worse, maybe there will be more oil imports from the Russia, or more domestic drillings inside China. These things could help.
Okay, I think. Do you want one more question? Okay, we take one more last question.
Okay, good. How do you see the life science industry in China? So I think the life science industry has evolved in China through different phases. So before 2020, the COVID, global companies basically see China as a low-cost, R&D center or producer centers for them. So-called in China, there's many so-called CDMO companies. They basically are the contracted R&D and productions, more like protein-based drug discovery companies in China. That's helping the global giants, for example, Eli Lilly or Pfizer's, or you name it. After that, because of that, there's a wave of startup bio companies emerged in China. But unfortunately, after COVID, because of the so-called ideology shift or China Plus One or these kind of more ideologic side of the issues, a lot of the global companies basically sheltered their access to China voluntarily. And this actually has changed in 2024. In 2024, it was the first year that one of the US companies announced acquisitions of privately owned Chinese biotech companies for $2 billion valuations. After that, towards the end of 2024, the centralized purchasing agreement from the government to the hospitals has also removed the biotech science drugs from their harsh price cut list. Because of that, in 2025, we have seen the life science companies in China coming back into the right trajectory that they used to be. And because of that, we see some large companies, even the listed companies, are shifting their resources from generic drugs to more life science or high-end drugs. A good example could be Hengrui, which is the largest pharmaceutical company in China. They used to have less than 20% of exposures in the so-called more innovative drug. Now that recent ratio, if I recall correctly, is around 45 to 50%. So their CEO came back to the companies after Mr. Sun Peiyang came back to the company 2 years ago, and he really started to redirect the company into more high-end, the more advanced R&Ds of these innovative drugs. So overall, I think right now we also see the life science industry in China is evolving. It is also one of the top priorities for the government. So overall, the trajectory is pretty good.
Okay, with that, we come to the end of our webinar. Thank you again for joining us today. It was a pleasure to see so many of you dialing in today. And please, if you have any additional questions that haven't been answered, please feel free to send us an email at mail@hzgroup.com or send the email to any of us personally. So again, thank you so much for joining today and have a nice day and a nice long weekend. Thank you.
Thank you.